One, two, three. Hey guys, thank you everyone for joining. And today I think it's going to be, at least myself, I'm excited. It should be a really interesting session because we already had this discussion with today's panel participants on the topic. And honestly, we started with a very kind of simplified approach. We started with a part of the social media. We thought we were going to talk about the social media, the accelerator for the growth. But then we suddenly came to the point that it's not about social media. You basically have to get there. I mean, it's about the startups in general, the marketing. And we do understand the marketing is a substantial part of the business for any startup. So, thus, I'm really happy today to talk to you guys about this topic. And maybe let's kick this off. The very first question we discussed with all of you, because we had those calls, maybe just to, as you know, guys, to align maybe what you think about the topic, what you think about the most important parts. And the very first question always was fundraising versus bootstrapping. Maybe you could explain, guys, your position from your perspective. And maybe let's start with Kristjan. I mean, Kristjan, you have seen many startups, and you have participated in many cases. And maybe you have your own opinion. Either start with bootstrapping or with fundraising. What's your opinion?
Yes, thank you, and hello to everyone. Well, it's not a very original answer from my side, but it depends, like always. My general recommendation is and opinion is try to go with the bootstrapping as long as you can. And if you have seen that you have some kind of traction, you have a product market fit or unit economy in place, and then you're just seeing that maybe you don't just earn, not enough needed cash for scaling and expanding, then definitely you need to raise some money because traditional banks don't give it.
Fair enough. Of course, when you mentioned it's not original, I agree, not original at all. Artur, maybe let's proceed with you. And I mean, you're in the, let's put it this way, early stage, very early stage. So everything is fresh in your head. And maybe also emphasize why we're talking about this question, because we, as you remember, we kind of started about the funding for the marketing. Therefore, we came back to the very beginning. I mean, where to get the money for the marketing. So what's your opinion? What's your take on this regarding fundraising versus bootstrapping at the very beginning?
Sure. On this, I will probably agree with Kristjan. Since, especially in the beginning, if you can finance your company with your own funds, with current revenue, it's always good for the company to have more flexibility, have unlimited time and so on. But there are cases when you really feel that the market is just right there and you just need to put a lot of money on the marketing, then of course fundraising may be a good option. It's really, I will say, diverse in terms of where you need to bootstrap and when you need to fundraise. And it mostly depends also what type of business you have. Like if it's typical B2C type of company, in most cases, I will say that fundraising will be the type of the model that you probably will choose, right? Because you need to really fund the growth, and there is a huge market, and this market is very price sensitive, so you need to a little bit damp the prices, lower the prices at the beginning to get the amount of customers on your platform, and then you can monetize them later on. In the B2B, where we are working as data mobility, we see things a little bit differently. So for us, if the customer is not paying for our services, what will going to change if we'll have thousands and millions of them, right? They will not change their pattern and still will not pay. So if our unit economics at the beginning is positive, then probably we can also finance the marketing from the customer revenues, right? So that's approach that we try to use data mobility. And I think it's also very different from B2B companies and from B2C, and also what is the type of the customer. This is a small business, enterprise business, and yeah, sure. But at the beginning, I would say if you can bootstrap, great. If you need to build your first product, probably you can fundraise, at least pre-seed, and then you can see how the product is going.
It's interesting that you highlighted B2B, B2C, or the differences, and I know that Petr is also always just underlying that there is a huge difference between B2B, B2C, and the approach. So Petr, maybe you can share your experience and also from a localized perspective, what you have seen so far, and what would be your suggest, basically, to anybody starting business.
Hi, I'm Petr. Thank you for having me. I would really say that bootstrapping versus fundraising, it should be very instrumental. You should not be focusing on which route you should take. Instead, you should be focusing first on the product market fit, and once you get there, on the growth. And then if you can grow as fast as possible without raising, you should not be raising. This is a dilution. But if you can accelerate the growth by raising, then this is what you should be doing. Since like you have limited time, right? Your life is not infinite, and also the competition is not sleeping. Definitely have more flexibility at the product market fit stage to bootstrap, but much less so in the growth phase. And yes, as I was saying previously to Māris, that there's bigger difference also with B2C, where your customers, they not necessarily are paying you immediately, comparing to B2B, where businesses, they vote with money. But still, like raising or bootstrapping instrumental, it depends on like how fast can you grow.
Sure. I mean, I love that you guys always mention it depends, because indeed it depends. So, but honestly, I guess nowadays it's easier for startups because there is more information. And for example, yourself, you're also sharing your experience. I guess a while ago it was more about, just if there is no such information in the market out there, everybody just was looking for the funding, very early stage. So proceeding maybe with the next kind of question we started and we touched after this discussion with you guys about the bootstrapping versus fundraising, of course, is when you start growing, when you start doing something, or when you start working on your startup or idea, there is one particular stage where it's super unclear. Assuming that there is product market fit, assuming that at least you think so. And we had really interesting discussions with you guys. What's your opinion about that? We called it on the one way, discussing fake it till you make it. I mean, basically, just do whatever it takes to start running your business. But on the other hand, also regarding the marketing, when you start investing, it's about the stop loss. I mean, at which point you would suggest any early stage startups to maybe think twice, maybe should I stop? And the question maybe even the two parts. Do you know, or do you understand, or do you feel when you should stop? At least you, Petr, we had a really interesting discussion. You also mentioned that you had not so good experience, and if you would now rewind back the history, you probably would take some other decisions. Maybe you can share. Is there any particular point, and how can you identify that it's not worth to proceeding investing in the idea anymore?
Like in anything you do, especially as a founder, but also as an employee, you should be a little bit of an investor. And then like every day or month, you should be thinking, should I be investing my time, my effort into doing this particular project or something else? And I was telling you, and I can repeat myself, I had 1 year of my life, of my experience, which basically was wasted on trying to fly something which was not meant to fly. So instead, I could have switched to other projects and give them a chance, which I did, but one year later.
Yeah, so I guess it's really hard to identify that point. I mean, it's really easy now to discuss afterwards, because now you can take other decisions. Kristjan, your experience, I mean, again, you have seen multiple startups and many companies. So what is your suggestion maybe for everybody regarding how to take those decisions, when to stop investing, including the marketing investments when you see this is not going to work? Or maybe there are some cases, fake it till you make it, go wild.
Yes. Maybe before I will elaborate this question, I would like to add maybe a couple of points for the previous question, just to maybe have some value add on. I mean, if we really want to throw it away that it depends a clause, and if we want to just go black and white, then the statistics actually from the EU side is that 80% of the exits are VC backed, or let's say private equity backed. So that's the statistics. So everyone can make their own decision based on that one. And on the second hand, as a founder, you should think that, when the moment when you take in the private equity or the VC money, the moment actually you don't own the company anymore, 100%. So you have investors on board, and investors, they have their own agenda. They want to, they want to make exits, they want to make profit, and so on. So you need to take this into consideration as well. But coming back to the current question is that, fake it until you make it or not. Let's be honest. Early stage investing, it's based mostly on thesis. That's it. Thesis about the idea, thesis about the team, thesis about the potential market, potential clients, potential hockey stick, and so on. So in that kind of perspective, it's all about fake it until you make it. I mean, it's all about the theory. It's not anymore about what are the results, behind the back. So definitely the angels must understand that, and also the founders must understand that, okay, this is the idea, this is our goals. And normally when the angels or investors stop investing is that when the story of the founders and the reality, is not aligned so much anymore. So for example, if the startup is raising the pre-seed round for let's say 1.5 years, and after 1.5 years, they have promised something. And if they have not delivered up to the level of the promises, then, then it's a big question mark. Why was it happen so? Of course, it can be some force majeure, etc. But if it's not, then it's a big question mark. Because for the next investors, if the first investors doesn't, come along and tag along in the next round, that's also a big red flag. That the first investors has lost the trust and who's the opportunity there.
Totally. So many variables are actually in place, basically. Artur, regarding this, what we started, this question about the stop loss, and you really fresh. I mean, you now growing, and again, always when we discuss marketing, it's very interesting. Also, it's not only among startups. It's also in mature, let's say, traditional brands. There is sometimes misunderstanding that basically product is being a part of the marketing. I mean, it should be like that. Though actually we know that even in traditional brands, they can be product development, sales, and marketing departments separately. I mean, in different rooms and even not talking between themselves. So maybe the question from your fresh perspective about the product. I mean, when you see maybe when you should twist something, or you see that okay, I shouldn't invest anymore. Should I proceed or maybe change something? Maybe you can share your experience, how you have seen it recently, and maybe some kind of the insights how you develop your product.
Sure. I would say that first of all, you really need to understand your customers really well. Like first sales, you can do it without even marketing. You just need to go and talk to your customer. That's rule number one. Talk to your customer, understand what they're searching for. And once you already know a little bit of the market, you know what they're searching for, right? Then you can start testing marketing channels. And for different marketing channels, there can be also different sales cycles, the budgets, the approach, the ads, and so on. There's a lot of tools and variables that you can use to really use the marketing channels. But at the end of the day, it's all about customer acquisition costs versus how much money this customer will give you back in certain period of time. If your lifetime value is X and your acquisition cost is below this amount, then probably you can push this channel to some point, invest more, maybe adjust a little bit of ads, improve something, and improve your lifetime value of the customer. But if this mathematics doesn't work for you, then you really need to understand, okay, what I can do to improve it, if there is a room for improvement. And if it's really negative channel for you, maybe you need to turn it off and switch this budget to other channel. And there is hundreds of different ways how we can approach customers. We can test one by one, maybe 2-3 channels will be your core ones. Usually, like every company has like 1 or 2 channels that are the core, and then they're having a side channel that may work to some extent, may not even. So my suggestion will be always take a look on customer acquisition costs, know exactly what it is for each channel. If it's B2B, sales cycles is also important. How much time it takes your team to close the deal from the first contact with potential customer, and then calculate lifetime value. So this is probably the core formula for marketing.
By the way, you combine now organically, you just went to the second question I wanted to ask, like the following one. I mean, assuming that, okay, product is okay, we have passed the initial stage, we feel that we have to start investing properly, there is always this question, always, which channel to start? I mean, obviously, again, guys, it depends. Of course, we do know that, I mean, if it's B2B, you might look to the LinkedIn, let's say, if I'm talking about social media advertising. If it's B2C, it's a different set of channels, most probably it's going to be Facebook. So, Artur, maybe just continuing this discussion, what's your position? There is always this question, I mean, lacking of talent, because we do understand that the marketing also requires some decent experience and talent in-house. So what's your approach? Do you rely on in-house resources? Do you hire people for the marketing, or you just use agencies, multiple agencies dedicated for each channels? And how do you decide whom to choose? Maybe you can share your existing, let's say, organizational, not the chart, but maybe the approach regarding the marketing ecosystem.
Yeah, sure. It's like you mentioned it very correctly. It's all about what type of expertise you have in your team. Maybe the founding team have super huge knowledge in Facebook, so probably they will start with Facebook ads and they will do whatever it takes to make the Facebook ads work, right? In our case, we don't have, let's say, marketing expertise in-house the team. Of course, we have basic knowledge and we can control some of the metrics and so on, but we're not the employees that work for marketing companies for a year. So of course we outsource that, right? And we have really a little bit different approach than most companies probably do. We have different agencies for different marketing channels to divide it and see how each channel performs, and also to understand how each marketing agency performs. And on top of that, we're also working with external experts in specific fields. For example, we have an expert in Google Ads, we have an expert in content marketing, to have a little bit of third-party opinion on what we're doing and what agencies are doing. Because we cannot, at this stage, we cannot afford to hire, let's say, 5 marketing experts for content, one for Google, one for Facebook, and so on. It will be just too big team for us to handle, right? So we try to outsource it from the experts, take a look on the market who has expertise in this particular field, and agree on some terms that they will overview what we're doing and consult us on a regular basis.
By the way, I hope that your agencies are not watching this, but I'm going to have the straightforward question to you as well. I mean, of course, at the very beginning, there is always dilemma from agency side, any agency. If the startup comes, I mean, the volumes are really low. You have to decide either to work with this client because, I mean, the profit going to be obviously lower. And then you have this dilemma. Okay, we're going to grow together. At one point, I will start earning from this client. But again, from your perspective, it's at one point, you might take everything in-house. I mean, what's your take on this one? I mean, how do you build your relationships with agency? Do you have some, the long-term marriage, or you have fair agreement that, guys, I don't know how long we're going to go together?
Yeah, sure. You should put some expectations up front, right? So we always try to discuss transparently, so that, hey, guys, we're trying this channel with you. We're trying definitely a different channel with other agencies. That's not the part of the discussion. We have this channel. We need to somehow hack it. If we're doing well, I will find the money, right? This is not a problem. If the marketing channel is profitable for the company, then the team should find the money to fund this channel. There is no question for that. And of course, at some point, we may hire some people in-house, but when, it's another question. So I will say that for agencies, they should understand that we will be with them for at least a year, maybe 2, right? And it also will be a great experience for them to take a look on our markets, understand a little bit what we are doing, and maybe use the same experience with other customers. And from the startup point of view, of course, you should be easy customer for agency, because you also understand that, okay, you may be small, so basically try to structure what you're saying, what you want to achieve, and how frequently you, let's say, have conversations. So it's all about the structure. If it's very transparent and the agency understands what you expect from them and KPIs are there, I think it's not a problem for agency to work with a startup.
Fair enough. Fair enough. Petr, I know that you have your own opinion. It's very interesting. I mean, Lokalise, again, maybe we are kind of biased because we are living in this bubble that it seems for me that Lokalise really works well on the marketing and also awareness. We know the brand. So maybe what's your opinion in-house versus agencies, or let's say outsourcing experts for the marketing needs? How is your team built now, and what you believe in? I mean, what's your approach?
I would start from a different angle. So I believe startup, it lives through 3 stages of like expanding, growing. One is in the beginning, this is growth hacking. This is where you don't do marketing. You're still in this product market fit phase. This is, you don't want extra noise, but still you need to have like a number of customers to try everything, right? So you need to have customer interviews and so on, and data. So this is growth hacking. Second is testing different channels. So once you feel there's some product market fit, you would like to test channels, and this is as many channels as possible as you can imagine, and like in switching campaigns back and forth. And your KPI is basically the turnover of ideas and turnover of testing. And then the stage 3, you try to optimize for unit economics. So like in this perspective, for me, either using agencies and do it on your own, this is again, the same as fundraising. This is instrumental. So you need to try everything. You need to try different agencies. You need to try like different approaches. But at the end, you may end up working with agencies since like either they let you test everything, and once you find some channels which like are good, you try to find the depth. So you optimize for unit economics. So I'm welcome. What I don't want to have is like this limit my imagination by going into some limits. So here I welcome any agency as far as the resources allow, especially managerial resources. I especially welcome agencies who have many ideas to try, and everything is measured by results. The beauty of being in the modern economy, in the internet business, that you can measure everything, and then like results will tell you exactly where you should continue, what you should adjust, and where you need to cut.
Yeah, it's fair enough. I mean, from my perspective also, guys, I agree that there are many angles how to look at them. Of course, it depends on the stage. And I can say, seeing like a lot of clients, a lot of advertisers, startups and agency corporations, the best chemistry, I would say, is kind of putting everything together. That basically whatever, as we discussed with you previously, Petr, that if you have this expertise in-house, you just grow this expertise. I mean that you do know what you're executing and why and when. At the same time, some additional value you can get from external resources, let's say from agencies, because agencies, in some cases, or outsourced, let's say, experts, some cases they do know the fresh stuff happening in those channels. Therefore, you can kind of inject additional knowledge in your marketing team. Kristjan, what's your? I will actually twist a bit the question for you. I mean, because outsourced resource is one, in-house is second, but third one, from the, let's say, angel, from your perspective and from investor's perspective, it's even the third option. The third option is that somebody is kind of taking this knowledge in the form of the investors on the angels. I mean, how have you seen so far, how it's happening, let's say, in Baltic states from your perspective? What's the most common way to use investors or angels properly for the marketing?
That's a good question. I think you pointed out the main reason, one of the main reasons why the startups should take the money from angels, because of their expertise and the network from their previous career or current career. So they have different skill sets in financials, marketing, sales, business development, exporting, etc., etc. So I have seen many great companies actually who are using the current investors pool from angels in a pretty good level. meaning that they are engaging with them. They are maybe even making a unofficial advisory board and so on, who is coming together once per month or once per quarter, or depending on the business. So that's very welcome. And actually, that's also what the good angels actually want to support the startup with, not only with the money, but also with the knowledge and skills and network. But in terms of the in-house outsource, I'm in a situation where I have been also in my career managing and owning the digital marketing agency for 12 years. So I have been in one side of the table and also another side of the table. And I can say that it's very much depending on the agency itself. First of all, the capabilities of do they understand the startup ecosystem and the speed of the early stage companies, meaning that the speed of the building, measuring and learning and repeating all this stuff is extremely fast. And most of the agencies actually are not used with that kind of speed and this kind of hacking growth kind of mindset, which is a no-go for a startup. But if the agencies are understanding this, and also main the reason why the startups are using agencies like the previously already mentioned, is that they have expertise. This is just a shortcut. It's just renting their expertise and skill set to just make it faster and make it better.
Okay, I will spice up this discussion now, Kristjan. I will ask you a straight question. I mean, you have seen many companies in Baltics in particular. So what's your opinion? Are we good in marketing? I mean, do you see a lot of talent? Do you see a lot of people whom you can trust, including not only, let's say, the startups, the start and the talent inside, but also external resources, how you describe now. What's your opinion? Are we good at marketing in Baltics?
I think that we are very good building on great products, worldwide products, international products, which is used widely. But actually, we suck at marketing, sales, and business development, international marketing and sales and business development. And the main reason is that we're having a big lack of talents. There is, as we all know, we are missing a huge number of engineers. Just I think in Estonia, this number is close to 10,000 engineers. What we are missing currently. But at the same time, I think we are missing also a large part of very good international marketers, international experienced sales guys, and then business developers who are actually, at the end of the day, making the business happening or not. You can have the best product in the world, but as the history has shown us, not all the time the best product will win.
That's interesting. I mean, obviously, whenever we see that, each of these startups I see around always ending with a couple of slides, we are hiring everyone. I guess also Petr would say the same. And actually, honestly, just a small advertising pause also. Unfortunately, one of our potential panel members, discussion members, couldn't join us from the Kilo. They also told me, yeah, we are hiring. We would like to give the word out. So basically, maybe we are not so loud about the marketing people. Maybe. I'm not saying that everybody, because I see a lot of companies doing that, and more about engineers. Petr, what's your opinion? I mean, do you agree with Kristjan that we are kind of, let's put it mild words, not so good in marketing in here, and maybe we're lacking some talent? Maybe not. What's your opinion?
This is probably Kristjan comparing to other markets, for instance, the United States, where you can have a shitty product, but you can market in the beginning and in this fake it till make it trial even be succeeding, but not necessarily. Actually, I think that our ratio of marketing, especially in the initial stage, missing it and being strong in the product, is an advantage of both Eastern Europe and Baltics in particular. And as soon as you have this product market fit, and then you'll test in channels, and then only you start to double down on the channels which work. This is first, your product market fit will be tighter, since there'll be no extra noise coming from some random people who your paid ads, for instance, were converting. And second, it lets you reach out to other markets for marketing, since Baltics is not ultimately your target, right? So I would say we are better off than like traditional markets in the United States, the most advanced one, where like you see a lot of startups failing because of this initial marketing noise, which do not allow to have this tight product market fit. I didn't test it, didn't calculate, but I believe the failure rate of Baltic startups and East European startups is much lower than the failure rate in the United States.
Oh yeah, those failures. I mean, a lot of numbers around. People used to just, name numbers, sometimes without any exact backup. Artur, what's your opinion? I mean, if I would ask you now, I'm just emphasizing you in kind of a relatively early stage. So if I would ask you honest answer, listen, are you good at marketing? Do you feel confident at whatever you do so far? I mean, or you need some additional resources you would like to find somewhere, but you cannot find those in Baltics. What's your general feeling about our capability to execute proper marketing? By the way, just to underline, by marketing, I mean including advertising as well. I'm just not talking about advertising, but the marketing as such. So what's your opinion on this topic?
Well, I think it's not about, let's say, particular Baltics or Europe or United States. It's more about the company itself, right? Right now we can hire from anywhere. People very rapidly used to remote work. So if you have resources, you can build your marketing team from United States. You can hire people from Uber, I don't know, from whatever company if you have the right pitch, the right resources, and you are really targeted on that, right? If I'm answering regarding is automobility marketing the perfect, I will say way far away from that, but that's okay for us, right? So for us right now, as also Petr mentioned, we're in a position where we are testing out of channels. We know which channels are performing well, so on that channels we try to optimize, and then we're testing. And on the testing, you shouldn't be perfect. You just need to test which is where you need to invest a little bit more time, right? So for that, it's totally okay for us not being perfect with marketing. At some stage, I assume, let's say, when you hit some milestones in revenue and customers, you need a little bit to switch the gears, and you really need to focus on perfecting your marketing. And at that point, there may be a problem of, hey, we cannot find any expert in Baltic for that. Should we take a look at the German market? Should we take a look on UK market? Maybe you should hire from United States. So I disagree that we really bad at marketing as Baltic companies. I see a lot of companies from Baltic having really good marketing, like advertisements and ways how they market the product. And really, if you compare them to other European companies and even United States companies, they're well can compete with there, right? It's more about the company, who you're hiring there. Of course, maybe we don't have so much expertise in market if we take a look only in the Baltic markets, but again, we're not limited to that, right? So you can really take a look further there. So that's my point of view on that.
Yeah, this is probably, the topic where we definitely can agree to disagree, as you say, because so many experiences, so many cases. Just while we discussing this one, I thought about that, let's say our perspective, honestly, from Httpool side, for example, we are like growing really fast now. And I see that in particular worldwide, but also in Baltics, I see that we are having really nice talent pool. I mean, I really see like good marketing people, good digital marketers. I mean, therefore, it's kind of, I have confidence that we do have them out there, but probably just a question, how to attract them to also to the startup ecosystem. Because, it's always a challenge. I mean, if you see the startup there, it's like, okay, this is going to be interesting. This word challenge, always. Do you accept this challenge? And maybe as experienced marketer, you're sometimes going to think twice, okay, should I stay with this, let's say, stable traditional brand, or should I go with those guys in the startup and let's gamble? So, but again, continuing maybe about not going in details about the marketing channels as such, but in general, Petr, you mentioned about identifying the best working channels for you. I mean, what is your approach, or how do you do that? Talking about, let's say, some KPIs and some metrics. I mean, have you invented, if I may say so, invented your own system, how you evaluate whatever unit economics and all whatever buzzwords we're using, or you basically use something already from the your past experience, or you maybe hired somebody with already existing knowledge how to evaluate properly your metrics, proper metrics? I mean, how do you do that in Lokalise? How it's happening in reality?
Like everything is what you say. So we're building this dashboard, and nobody else would actually understand our business than us. This is like full focus, 100%. No external consultant would do it. But yes, we're using like all the knowledge we can get. So we use our angel network, which is 18 people. We're using our investors. We're using all friends, all like acquaintances, our partners, agencies, so everyone. But this is also how we hire. This is also how we do product development. This is like whatever we do, we do everything. We prioritize, yes. So some things are less priority, some are higher, but like we use everything. And there it's constantly, it's evolving. It's not that like we built it and we stop doing this. It's constantly evolving.
Yeah, maybe you're right. I just understood when I asked this question, understood that for you it's probably a bit harder to answer, and actually answer most probably is obvious. I mean, you have to look at this custom. I mean, it's ad hoc for you. It just fit for your business. But maybe Kristjan, for you, it's going to be more relevant question, because then again, if you're starting with any potential new product with startup, and obviously, as we discussed like 10 minutes ago, that in some cases, in most of the cases, they do evaluate your value within the potentially within the growth. I mean, if you have your marketing background, people most probably expect some advice from you. Do you have some kind of, I don't know how to call it, the package, entry package that you can provide? Let's say, okay, guys, let's start with the marketing. Here's a template. That's what you have to fill. That's how you have to proceed properly with the branding, all that stuff. I mean, do you provide some kind of, I don't know how to call it, like box starters pack?
I think if this box will exist, then the owner of this box is making a lot of nice chunk of money.
Let's do it. Let's do it. Kristjan, let's do it.
In reality, I don't have it because every startup is different. The founders' specialties are the different, their skills, etc., are the different. So it's always a matter of the founders, the product, the market, the stage as well, where the startup is. So, like Artur said some time ago, is that at some phases the marketing is absolutely not so important at all. It's more about, for example, in B2B, it's more about, okay, what's the sales process? How I can get customers on the calls and how I can close them, and then how much them I can keep after some time. And if the retention is good, then okay, how I can scale it up step by step. So it's very much depending on startup by startup.
Fair enough. If we talk about since we just discussed, I mean, the whatever templates or metrics or KPIs, a lot of cases, of course, when startups still are looking, let's say, for the investment. Let's take those cases, or at any stage. It's all about, of course, the KPIs, metrics, and the hard numbers. So, and I'm always wondering, I mean, is it possible to play with those numbers? I mean, how do you evaluate if you see that, let's say, business KPIs in general, marketing KPIs that you're asking for during some due diligence? Maybe, Petr, this is a question to you, because you have done it also from your perspective. I mean, can you play somehow with the metrics to basically to show something better than it is in reality, or it's really hard to do that it's always always going to be really clear, and people do understand those metrics in a startup community regarding the marketing also?
The thing is, you should compare raising to marriage. Can you trick your other partner? Probably yes, but why? So this
yeah, that's a good question. But I mean, in terms of let's be honest, sometimes, of course, you're desperate, you want to go whatever it takes, and you just, of course, you're going to show some numbers. And is it always possible, from your experience, you always, as you mentioned, you looked at the numbers also to your company growth, and you have had some previous experience?
Yeah, I can tell you. So, like, first, you should be caring about your reputation. And from my experience and like common sense as well, like an investor who is VC, right? So they're in the high risk, high return. And what they will not appreciate is low ethics. And they'll be fine with failures. Actually, we've seen a lot of examples when there's like consequent, like a sequence of failures, and the same investors are still investing in new rounds, in new projects, and then it's just good people, good ethics, like smart enough, and then they at some point of time it's skyrocketing. So you should always care about your reputation. This is not your last attempt, maybe. And then again, so investors, they appreciate ethics. So they know that you can fail, like you can fail, but not tricking, please. And also I want to say that the good investor should provide a target, this is a founder, with a different angle, like some extra knowledge, different angle, which founder actually didn't look at. And really, as a founder, I really appreciate investors who are looking from different angles, who talk to their portfolio companies which are using competitors' products. So bring something extra. I don't need this like reflection on my data. I want them come up with some data as well.
That's good. Actually, I agree, Petr. It's very good kind of advice. Maybe temptation is huge sometimes, play with numbers. As we know, it's really easy sometimes to prove something that's even not existing on Excel. But I think it's good advice to understand that maybe this is not a last attempt. Think about it twice whenever you want to do something with numbers. By the way, Kristjan, from your experience, have you ever seen any cases when you talk to the startups or maybe already your portfolio partners and guys you're working with that the numbers are played with? I mean, that you definitely see that something is wrong and, hey, listen, guys, what is going on? Let's recalculate this. Maybe it's an honest mistake or maybe you just want to fool me.
Yes.
That's good. Maybe share a bit more. I mean, how did it happen? How can you protect yourself? Or maybe I'm not leaning towards like suggestion how to avoid that you're being catched. I'm just trying to understand maybe what not to do and what people try to do.
Well, honestly said, I have probably never invested because I see potential in financial cash flow, forecast. I mostly invest because I see potential in the team, and I see a very good fit, like that the team, that the founder and the product is very good, have a very good match. And this is the main reason, and the financials can be way too up. And then I just tell that, maybe you just want to look it over because for me, it seems unrealistic that you grow next year, 150 times. That's not possible, or if it's possible, then good for you, but maybe let's aim a little bit lower. Because if you right now promise to all the investors that you go next year 150 times, you need to deliver it as well. Do you understand that? So it's a little bit about reality check because not all the founders are, dealing with the Excel sheets and financial forecast and so on. That can be, that can be okay as well. But what I really don't like and totally agree with Petr in terms of, transparency and honesty. And normally you can understand this when you have, conversations with the founder team and so on. You just ask the questions and probing a little bit more and so on. And most of the time, when I have a feeling that they, basically they're lying to me, is not I have seen it on Excel sheets. That most of the time I found it just through one-to-ones or just through the dialogue, the open dialogue. And of course, that's a red flag.
By the way, follow-up question to you just came into my mind. Because in a lot of cases, we do know that also in mature companies that there is always the same question about the benchmarks, about the benchmarking. And honestly, also from digital marketing perspective, even if we talk just narrow down the discussion to the advertising, very often we're getting those questions, okay, I'm doing kind of good, it's like if you look at our ROAS and ROI, I'm kind of satisfied. At the same time, there is always devil inside me. Maybe it should be better. Maybe my competitors are doing ROAS 2.36, not 2.1. So how do you, Kristjan, whenever you have diverse like portfolio with multiple kind of companies and different branches and categories, where do you reach for some benchmarks? How do you understand if it's good enough? I mean, if you do that at all.
For an early stage, and early stage, I mean early revenue as well, is that the first important benchmark is to have a product market fit. And for a product market fit KPIs, we can see the retention or the churn or all this stuff, which is confirming that okay, you have a value offer to the client and they want to go away from your side. Now, in terms of next phase is like, okay, if we want to scale, then that's okay. Now, then it's all about the growth rate. Okay, how fast you can grow, weekly basis, monthly basis, maximum, not quarterly basis, because we are in the rocket ship as a startup, as an early stage startup. And then, okay, if your growth rate is, let's say, for example, 10% in a month, 15% in a month, which is kind of ideal for a B2B and 20+% maybe for a B2C, depending again, is that, okay, how you can grow, what's your growth, source, or what's your growth engine, what is allowing you to grow in such a rate. And if the unit economy is there, at least, break even in terms of the cash outflow inflow, that's already a, big positive thing to happen. If this is a negative, then it's also okay. If there is a strategy behind it, why it's negative. If you just want to grab the market as fast as you can, for example, and so on. If it's positive, then sometimes, the investors also tend to ask that, okay, why it's positive? I mean, we don't want to make money. We don't want to be profitable at this stage. We just want to grow as fast as possible. So maybe we just, recalculate some stuff and maybe we can just take some profit from that channel and then put it into the 2, 3, 4 other channels to just test it out. Maybe we can start also working with other channels, which are maybe at the beginning more negative. So I think in a different stages, you have different KPIs and then metrics to follow as an investor. But most importantly is the growth, the speed of the growth, the retention rates, the unit economy. So these are let's say the 20%, what makes maybe 80% of the investment decision.
I think it's a good point you just mentioned about that being positive or negative. That sometimes, of course, instinctively seems that if I'm going to be positive, it's always going to be good. But I agree with you that sometimes those questions, why are you positive? Probably you're growing too slow. Probably you could grow twice faster than you do it now. And I do agree because we see a lot of, especially in gaming and apps field, we have a lot of companies just going for user acquisition, just straightforward. They do know that the return on ad spend is going to be best case scenario 18 months, maybe even more. At the same time, they don't care about it at this point. If they see other metrics like retention good enough, they just go wild. And Artur, last question to you maybe regarding business-to-business field, because it's more, I would say from my perspective, it's more complicated to calculate maybe the affordable benchmarks. For example, if you calculate so-called quality leads, how much are you ready to pay for that? Let's say if you use LinkedIn, for example, are you ready to pay for your business-to-business potential customer, I don't know, 50 euros, 100 euros, maybe 500 euros? Because at the very, very beginning, it sounds insane. I mean, how do you look to this whole pipeline about the prospects and leads and quality leads and maybe some metrics, what you can afford to pay for the potential client of yours?
Again, it's very depends, right?
Sure.
Especially in case of B2B, because there is very different B2B. Small businesses, when you SaaS type of businesses, or you sell to enterprise, right? And the sales cycles is very important, right? Sales cycle is super important for startups, so you understand how much time really takes you to close this particular deal in average. And knowing that, plus knowing the lifetime value of the customer, you can clearly understand how much money you can spend in total for customer acquisition, which not only like LinkedIn cost, it's also your sales manager cost, sales manager bonus, customer support and customer onboarding in long term. So you just calculate all of that together, you get the number, and then you add your revenue right on top. And that's how you can calculate how much money you can spend per contract, for example. And it's more complex. The larger is the deal, the more complex is that, because the sales cycle is longer. So if you have, let's say, thousands of leads from the channel, you're not sure how many of them will convert, because you need only, let's say, 2-3 agreements worth hundreds of millions, right? If we're talking about really huge, large deals. On the other side, if it's SaaS type of business and you're charging small amount of money per month, let's say $50, $100, $200 per month, then usually the sales cycle is shorter. So you can really, you get your pipeline very clearly, understand, okay, we have thousands of leads, we convert like 80% of them. Then you can calculate a little bit different as well.
Gotcha, guys. Unfortunately, we didn't get to the point where I wanted also eager to talk to you about what not to do in marketing. But thanks a lot for this discussion today. I think at the high level, it was very, very interesting and hope for someone useful. And I would encourage anybody to talk about the marketing talent in our let's say the small marketing industry, and let's develop the talent inside the industry and see you guys around. Thank you.
Thank you. Cheers.
Thank you. Bye.
Thank you. Bye-bye.